Let's put more flesh to this conversation, even though we know that the Debt Management Office DG, Dr. Abraham Wankwo, also talked about the successful floating of the €1 billion bond. We're talking about the FGN savings bond that will be launched very soon. Eromonsele Aziba, an investment analyst with AfriInvest West Africa, joins me now. Good morning, Eromonsele. It's great to have you in the studio with me. So, taking a look at this FGN bond, what does it mean now for investors in the fixed income segment of the market?
Thank you again for having me. So yes, we've seen as part of the DMO's plan, their 5-year plan between 2013 and 2017, to continue to deepen the debt market and introduce new instruments. We've seen them come up with an ingenious idea of a savings bond, which is supposed to ensure improved financial inclusion, also try to encourage savings as well as improve liquidity within the market. And it's also more or less targeted at the retail segment, because we know in traditional bonds market that we have most of the players there are the HNIs, the PFAs, as well as institutional investors. So with this savings bond, given the peculiarity of the bond, it's expected to be targeted at the retail investors.
But how different is it from the regular bonds that are traded on FMDQ and even sometimes on the Nigerian Stock Exchange?
Okay, so currently, according to the plans that we heard from the director of the DMO, there's going to be a 50 million cap, a minimum of 5,000 naira and a maximum of 50 million naira in terms of subscription. Maybe to put it in proper context, in the traditional bonds market, if the DMO is going to be raising about 100 billion, right, and a single investor is willing to give that 100 billion, then that single investor can clear out the whole auction. But with the savings bonds that we're seeing, given that there's a cap of 50 million, it means you won't be able to put in more than, no single individual will be able to put in more than 50 million into an instrument at a time. So this creates the opportunity for more investors to come into the market and key into this opportunity.
You said more retail investors, and since the beginning of the year, the capital markets, the Securities and Exchange Commission, and now the Debt Management Office has been talking more about engaging the retail investors in, trying to boost the Nigerian capital market. So this is one of such plans. But then there's also a possibility of maybe a corporate investor hijacking this particular instrument. For instance, if you have, because it's it's a tenor of 2 to 3 years.
Yes.
And so it's supposed to be for those who don't have that much money to play in the bigger segment. But won't we have a situation of a corporate investor, for instance, edging somebody out of that segment?
Oh, well, there's also that risk that could happen. But you have to bear in mind that since there's a cap, it actually limits how much the corporate investor will be able to do in that space. There's every likelihood that they would rather stay in the already existing bonds markets, especially given that they might actually have higher yields at that space than at the savings bonds end of the market.
So it's a tenor of 2 to 3 years,
yeah.
And for a bond like this, what kind of coupon rates should we be looking at, and what's the yield as well? Will it be like the FGN bonds already?
So currently, if you look at the trading bonds instruments, especially the ones with a term to maturity of about 2 to 3 years, we have yields currently at about between 15% and 16%,
which is still good.
Yes, so there's a likelihood that if they actually to introduce the savings bonds, it would possibly also be around that same range.
But do you think that it will also be as subscribed as because we always get situations of FGN bonds being oversubscribed when it's auctioned? Do you think that's the same thing that will happen to the FGN savings bond when it comes on?
Well, one of the key things that could happen is some of the investors who aren't able to get at the other end of the market might decide to key into this opportunity. But in terms of looking at it in a broader sense, I think the trying to determine how well investors will treat this is dependent on the sort of awareness and sensitization that is raised as regards the instrument, educating investors on the benefits of investing in savings bonds. So this just goes to show that we need to improve financial literacy within the market, because we currently still have some opportunities that are there for even these retail investors to key into, but they aren't aware of the benefits that they could get. So improving financial literacy is one thing that we need to stress in the market.
And who should be the drivers of this sensitization program?
Well, the agency is us. I mean, this is a good avenue for. I mean, Channels is probably the most watched Nigerian television station. So I mean, anyone who's listening to this conversation will also get a sense of what they can get from investing in this. So there's just that need to spread the news in a matter of speaking.
And it's a good news.
Yes, it's a good thing for investors who want to take advantage of this.
Okay, so but still talking about the bonds market, but not about the FGN savings bonds now. Today, the Debt Management Office will be holding its second auction for the year, 110 billion naira in the various instruments. What do you think? Will it be oversubscribed, just like how we saw in the first auction for the year?
Yeah, we also have to remember there's also a treasury bills auction. So yeah, there's actually a lot of liquidity within the system at the moment, and given the fact that investors' appetite for equities has been severely pressured by the poor earnings releases that have been coming in, investors would direct their funds to the fixed income market, and we expect to see a lot of interest in these at the auctions, both the treasury bills and the longer dated bonds auctions also.
But even though we're still waiting to see most of the heavyweights listed on the Nigerian Stock Exchange turning their results, we already see investors taking a very tepid approach to how they trade equities. For the equities market, do you think this will continue, and for how long?
Like you mentioned, we're still expecting some of the heavyweights, the tier 1 banks most especially. We expect them to still post some sort of positive results, given that a lot of them would have benefited from FX revaluation gains. But given the fact that they would also try to maintain their dividend payment history, we might see a lot of investors take a key into this opportunity in order to get dividends. So maybe the period when we might see an upturn in market performance might actually be when we see some of the tier 1 banks release their results, because we expect this to be largely positive.
Everyone said, thank you so much for coming on the program, and of course sharing your perspectives with us on this FGN savings bonds and other issues related to the markets. Business Morning continues after this. Join us again.